Good afternoon, everyone. Coming to you live from the Johannesburg Stock Exchange. In Asia, markets seemed a little bit mixed at this particular point. Investors are monitoring what is happening with Evergrande Group. The company did come back to trade, in opening trade closing down 12.4% after a 2-week halt. But as we look at the individual bourses to see how they performed, Hang Seng Index down 0.4%. Markets in China mixed, and the Nikkei in Japan was the one that led the losses, particularly in the region, down 1.87%. As we look at what's happening on the European side, stocks as well pulling back slightly. It's that concern around Evergrande Group and the implications it could have. We did have companies publishing their numbers for today, the likes of L'Oreal, Unilever, Hermes, and we also had Barclays publishing their financials, meeting with its counterparts in the US who kicked off the third quarter of US earnings. Looking at what's happening stateside, stock futures at this particular point declining. We had 70 of the S&P 500 companies reporting their earnings, and according to Refinitiv, 86% of them, their financials beat expectations. But to talk to us about how all of this is unfolding, particularly as we bring it in locally to our markets on the JSE, we are joined by Tato Mashego from Sanlam Private Wealth. Tato, thank you so much for your time. I mean, I just spoke about Evergrande Group and what's happening on that particular front. But what are you seeing that in terms of concerns happening on the global markets, and how's that affecting the JSE?
Good afternoon, Nastasia. As you mentioned, there are multiple factors impacting local and global markets at the moment. You mentioned Evergrande, and it is a short-term concern with regards to its default, or it is technically in default. It has until 30 days, which expires tomorrow, and judging from its first default until the 30-day grace period, which it will fully be in default. But it's not a significant issue given the fact that the Chinese government has ample resources to deal with the Evergrande situation should they choose to do so. One would be obviously putting back on some of the restrictions on property sales, which they've done. They could lower the reserve requirement ratio, for one example. They could lower interest rates. They could also order SOEs to purchase assets from Evergrande. We did see yesterday that Evergrande's sale of its property management business did fall through, unfortunately. So this is quite negative news for bondholders of Evergrande. But in terms of systemic risk, it is somewhat limited, at least from that perspective. But there are various other factors that are impacting global markets at the moment as well.
Right. Locally, we had various trading updates, production updates from the likes of Sasol, Kumba Iron Ore, Anglo American. However, we also had results from Clix. What did you make of their annual numbers?
Clix did come out with their annual numbers to the end of August. And the results seem quite positive. Group sales were up 10%, which was a mix, obviously, between the retail health and beauty division, which was up 8%, and UPD, their wholesale distribution division, which was up 12%. This led to a slight margin contraction to around 8.2%, so 10 basis points decline from the prior year, just given the lower margins in UPD relative to the retail division, as well as some mix changes in the retail space. They did obviously mention the issues of the social unrest, which did impact their KZN region. Over 50 stores were looted, unfortunately, as well as 2 distribution centers. Both DCs are up and running now, and all but 10 of the stores are up and running again. They have claimed to Sasria for a claim in excess of about 700 million, and that is in the process of being processed, so to speak. They also shut down Musica during the year, so that's now just continued operation. When you exclude impact of the social unrest, their diluted HEPS was about 9% relative to 2% when you include the social unrest impact. I mean, in terms of the outlook, it's relatively positive, but that's contingent on continuing vaccination drive. Clix is one of the largest private sector players in terms of vaccination capacity. And they are opening, or they do plan on opening, about 30 stores in the new year. They're also acquiring some pharmacies from Pick n Pay, as well as opening up other pharmacies of their own accounts. So quite a significant expansion plan for the coming year. So the outlook in terms of the economy looks relatively positive, judging from Clix.
Yeah. So the health retail stocks are typically seen as defensive, generally around tough times, because people continue to buy medicine during times of economic strain. My question then is, between Disclamer and Clix, do you have a preference between the two? Is it a case of neither, or do you have a case where you want to take both?
Well, I suppose it depends on the particular investor and what they value. Both companies do exhibit strong quality metrics and growth metrics. Clix has never been a company that has been cheap, so to speak. It's always traded at relatively high multiples, but this is justified given their relatively strong organic growth over time, as well as their margins and their returns on equities, relatively ungeared balance sheet. Disclamer has historically has tried to grow quite aggressively by expanding its business. Growth did slow somewhat recently, and this did impact on its share price. But however, going forward, their strategies do seem to, well, at least from a Disclamer perspective, there have been quite a few acquisitions which may change the investment case slightly. Obviously, the Baby City acquisition, and then looking to buy into the medical insurance space and become more of a basic provider of medical services. And this would obviously impact the business going forward. So in terms of a comparison, one would have to obviously compare the outlook going forward, not just in the core pharmaceutical business, but also looking at their expansions into other areas of healthcare, as well as relative valuation. So it's never, I suppose, an either or a both, so to speak.
All right, Tato, thank you so much for your time. That is Tato Mashego from Sanlam Private Wealth. Other events that we are keeping an eye on is Intel's Q3 earnings that are likely to be released today stateside. Tomorrow we'll be looking at eurozone PMI figures, as well as, of course, the retail sales for September coming through from the UK.